EDF Energy today. EDF are a huge energy business, French owned, but they're big in the UK. And EDF, well, they produce energy, nuclear power plants, coal-fired power stations, but they also sell energy directly to consumers.
So they're a bit like a farmer with a farmer shop.
Yeah, on a massive industrial scale. So talking about EDF and how they're interesting, well, in the UK, there's been a recent government edict target to build at least one nuclear power plant per year.
And this is to do with trying to get the UK carbon emission neutral for 2050.
And this is a real change in policy. So go back a generation and lots of nuclear power plants are being built. In the last 15 years or so, there's been virtually nothing, because the zeitgeist, the feeling of the times has been, backdrop of Fukushima in Japan, big nuclear power disaster, and sort of emphasising the risk side of nuclear. And so a lot of countries, including the UK, have pulled back from nuclear significantly.
I think our government wants us to take control, not only of our borders, but of our energy policy. So we're not dependent on, from the UK's perspective, dependent on Russia, dependent on the Middle East. And so that's the strategic reason behind it. But let's get back to the accounting. What do you think it costs, Ben, to build a nuclear power station?
Well, according to EDF's estimates for Sizewell C, which is one that they're building at the minute, they forecast to spend £20 billion on building it, but actually, trying to forecast costs over a 10 to 15 year build period is very challenging. And actually, it's gone up quite a lot on that 20 billion estimate.
And that's going to take a long period of time. And let me just check that we're clear at what costs would be capitalised in the building of a power station. It not only would be the cost of buying the land, the cost of the concrete, but it would also include labour costs. So any cost that you incur directly in the construction of that asset would be capitalised.
Okay, so that means, there's some simple things you can go by. That land clearly belongs to Sizewell C. We've bought that land to build it. But then there must be other more judgmental costs.
Yeah, I don't think the auditing of the buying of the land and the labour is subjective. Well, maybe there's two. One is interest, because if you specifically borrow money to finance the project, then the interest on that would also be capitalised rather than expensed in the P&L. And secondly, there's the whole issue about decommissioning.
Oh, okay, so knowing that at the end of this nuclear power plant's useful life, which, by the way, can be like 60 years after it's constructed, so we've got 10 or 15 years building it, then 60 years of running it before we have to shut it down and make all of that spent nuclear fuel safe and take it out of action. So those costs we can capitalise.
Absolutely. Let's make it clear that under ISA 37, there will be a present obligation to decommission that nuclear power station, and the past event that creates that present obligation is the initial construction of it.
Okay.
So once you start building that power station, once you've got that power station, you have a present obligation that is in 50, 60, 70 years' time.
Right, so the amount of judgment going into that is enormous. So firstly, forecasting the cost in 60, 70 years' time, that is serious finger in the air stuff. When is it going to happen? We think it might be in 60 years, but it might be in 70 years. And we have to discount that cost to its present value, taking into account interest, risk and inflation in a discount rate to say what is the cost today of us decommissioning this power plant in in 60 years' time.
And EDF, that's their business. That's their business model. They've done this before. So they've got some experience on which to draw on, but it will be up to the auditors to form an opinion as to whether those numbers are reasonable, are true and fair.
And this is a classic area where you can't say whether the number is right or wrong. When you're auditing cash at bank, you can say that is how much money is in that bank account because I've got a letter from the bank confirming that there is 100 million in this account. When we're looking at forecasting a cost over a 60 or 70 year period and then discounting it back to present value, it's educated guesswork. Yeah.
It is. And I would call that an estimate.
Yeah.
And that estimate, with the benefit of hindsight, in 5 years' time, 10 years' time, is going to prove to be wrong. And when you discover that estimate or you revise that estimate, you're then dealing with International Accounting Standard 8, and it's a normal thing that you do. You then just spread the cost forward. It's a revision of an estimate. You do not go back and restate the prior year. So they're done and dusted.
Yeah, so at that point you're kind of going, look, we now know a bit more about what this cost might be, and we now know a bit more about what interest, risk and inflation might be over this period, and therefore we've changed our estimate of what we think this decommissioning cost would be.
But if we're looking at the accounts of EDF, as an accountant, traditionally I'm interested in, the profit and loss account, the cash flows, the assets and liabilities. But if I'm an investor and wanting to buy shares in EDF, there's so much more that I want to know about.
Yeah, well, particularly as a big energy firm, it's heavily involved in the government's net carbon zero strategy. Lots of investors now are looking at environmental and social data when they're making a decision about whether to buy shares in a particular business. There's loads of investment funds that have a specific social and environmental focus as a way of them attracting funds. And when you look at the financial statements of EDF, so you mentioned about the decommissioning costs, there's a huge number in the balance sheet for that. £13 billion they've got as their decommissioning provisions.
It's the second biggest number on a balance sheet, balance sheet.
That number forms part of the financials, which Deloitte, the auditor, has signed an audit report saying, in our opinion, these numbers are true and fair. They're free from material misstatement. You can trust these numbers because in our judgment as the auditors, we've been through them, they're reasonable.
Trust me, I'm an accountant. Yeah.
So that the financial statements, the actual numbers in the financials, that for EDF is about 70 pages. Right? There's about 70 pages of that data and the auditor has signed off on it. But at the front of the EDF financial statements, there's the director's report and the strategic report, which is full of this kind of wider social and environmental data, things that investors are really increasingly caring about. And the audit report, well, it certainly is not the opinion is not of this data.
But this data is absolutely crucial. If you're an investor in EDF, the whole business model about EDF is about the future of the energy market. It's about the buying into this system, the sustainability of the business, the sustainability of the business model. So why isn't that properly audited, Ben?
Well, I mean, the statement that is in, so it's a UK audit report, so UK regulations apply. And what happens currently is we have this other information section in the audit report. And what Deloitte say in there is, we've reviewed things like the director's report and the strategic report, the things that sit alongside the financial statements, we've reviewed them. And we've made sure that they're not inconsistent.
That's a double negative.
Double negative. It's already
double
confusing.
negative.
But there's nothing in that front bit that contradicts the stuff that we've audited in the financial statements. So you can kind of go, oh, well, that gives me a little bit of confidence in the strategic report and the director's report, but not loads. And it also makes this statement that it's also not inconsistent, double negative, with anything else that we're aware of that we, as part of our audit, any other information that we gathered in the audit. There's nothing in that front bit of the accounts that we know to be wrong.
Ben, I wish we could time travel 10 years ahead and see what the auditor's responsibilities will be in 10 years' time, and see what sort of information will be regulated and required in sustainability reporting. Because I think this is an area which is massively going to change.
Yeah, so at the minute, you could describe it as a Wild West. Companies can report whatever they like on this environmental and social stuff, because there's no fixed regulations.
And that makes it difficult for investors in comparing, doesn't it?
Nightmare for investors. But the regulators are slow. It's bureaucracy. They're trying to create rules, and they are in the process of creating financial reporting regulations that will drive what companies have to report. But at the minute, those regulations aren't in place, and therefore for the auditor, there's no responsibility for them to check that these numbers have been properly created.
It's a slow world. It's a cruel world.
Oh, you got it. Okay, so this space is changing massively, and actually, if you're in the exams world, this is the kind of thing that the examiners are kind of looking at because it is in the front of their mindset. But anyway, I digress.
It's in the front of investors' mindsets. It's in the front of accounting's mindset. It's in the front of auditors. It's a real issue, isn't it?
Yeah, absolutely. Cool. So that's us done for EDF. I hope you found it interesting.
Thank you very much for listening.